It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston, and welcome to the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. Today, we're going to get into something that doesn't really show up in the MLS data or mortgage charts or really even consumer confidence indexes. It's the emotional undercurrent of the market, the beliefs and the expectations of buyers and sellers and investors, and how those are shaping real estate outcomes right here in Charleston. You know, locally, home values aren't collapsing, but they aren't booming either. Nationally, you know, inventory is building, but transactions aren't really happening at the pace you might expect. And so today, we're going to break down why that is, starting with the fact that confidence, consumer confidence moves first, and then transactions follow later. So that's what we're going to talk about today on the Charleston market. We're going to focus on all of that. We're going to talk about why the market feels stuck. We're going to talk about the challenge, and then we're going to talk about the opportunity, right? There's some windows of opportunity that not many people are focused on right now. And I want to help you guys understand where there might be some opportunity for you in this market. Now, for those of you that are listening that have a question that's private, you're thinking of buying or selling or investing, or maybe you have a property that you'd like for us to property manage for you through our property management company, I invite you to reach out to me. Our contact info is as follows. And by the way, this all goes straight to me, even though I have a real estate team and a few companies as a kind of conglomerate real estate team. But if you want to reach out to me personally, my number is 843-800-0065. That's 843-800-0065. Or check us out online on our website, listingsincharleston.com. That's listingsincharleston.com. And for those of you that listen to this on the radio station, please know that we also take video while we're here. So we put all of our radio shows into video form, and we put that on YouTube. And then we take the audio, we turn that into a podcast, which you can find on iTunes and Spotify and Google Play and all that great stuff. So let's start with just the national picture on confidence first, right? Despite, I think, what many would say is a modest rise in consumer confidence lately, I would say sentiment remains well below the levels we'd normally associate with a robust economic expansion, right? And that impacts how people view major purchases like homes. So, you know, even though the economy continues to grow, many people are still unsure about committing, you know, hundreds of thousands of dollars or millions of dollars to purchase a home. And so let's bring this down to Charleston, right? According to the latest market data, I mean, the average home value in Charleston is sitting somewhere in the mid to upper 500,000s, right around 570, 575. And prices have only gone up 0.3% year over year. And if you look at the median sales price, right, that was the average. The median Charleston County is 640, 671. It depends on the report in the neighborhood, because some of this data can get skewed depending upon what their filters are. But, you know, the other thing to watch here is that homes are taking 68, 70 days on the market before going under contract on average, which is a lot slower, of course, than the hyper-competitive market that we saw just a few years ago. And the inventory, you know, that's not tiny anymore either. You know, sellers are finally kind of adding more homes for buyers to choose from, especially when you compare that, of course, to the pre-pandemic scarcity that we had, where, I mean, at one point in time, I remember doing the math, and for existing homes that were on the market, not, you know, homes that can be constructed or homes that were under contract, but available homes, I think there were only like 500 or something of them. Now we've got pretty close to 5,000. So the data is basically telling us two major things. Number one, Charleston prices are stable, not skyrocketing, and homes are taking longer to sell. And both of these point toward hesitation, not collapse, right? So why does the market feel stuck? That's the question. Even with more options and stable pricing, I think a lot of buyers are still waiting for rates to fall dramatically, or affordability to return to 2019 levels, or, you know, prices to drop before they buy. And those beliefs, you know, even if they aren't necessarily rooted in current reality, are powerful enough to slow activity. That's the psychology effect in real estate, where perception becomes reality in the decision-making process. And on the seller side, we see a similar dynamic because, mortgage rates have been elevated for so long. A lot of homeowners are just reluctant to sell and give up their existing really low interest rate. And that keeps some inventory off the market, even though pricing is fairly stable locally and buyers could afford those homes at today's rates, right? So both sides are kind of acting with caution right now, right? And buyers are taking their time because they're trying to, quote unquote, time the bottom or to get a better rate than the current low 6% range, even though we have seen a nice spike in mortgage applications and refinance applications as rates did come down here fairly recently. And I think a lot of sellers are kind of holding to national headlines and wondering if prices are going to dip, even though locally they're holding steady. And I think investors are evaluating risk very seriously right now. And with days on market increasing, they're looking at more aggressively protecting their cash flow, right? And baking that into the deal. So what does that create? It creates a kind of local confidence gap, right? Prices are stable. Mortgage rates have softened a bit. Inventory is rising. But a lot of people still believe that it's too expensive, or I should wait for a crash, or the market just won't recover anytime soon. And that belief, whether it's right or wrong, slows decision making. And that's exactly why the market feels like it's in a holding pattern, right? So, here's the interesting part, right? Charleston really isn't frozen. It's just behaving normally, right? We're seeing more inventory than we've seen in years, stable prices instead of these huge spikes, right? And longer days on market than, the peak frenzy periods. We're essentially back to where we were before COVID. And I've said that on this program a few times, but transactions are not skyrocketing, right? That's because confidence is still kind of catching up to reality. Buyer confidence isn't strong enough to push offers rapidly for the majority of homes that are on the market. And for those of you that listen to this show, you've heard me talk about the stats that our brokerage has exclusivity to that talk about things like the impact of your initial pricing on your bottom line as to whether you hit the price, right, or if you have to reduce your price and what that ultimately does to your net, and how long it takes you to sell the home, whether you price it correctly or you don't, or the fact that 1 in every 3 properties that hit the market right now are not selling. They're being taken off the market. They either fire the agent, they decide not to sell, they rent it, whatever the case might be. 1 in 3 of them aren't selling. And so what we're seeing instead is, seller confidence just really isn't strong enough to bring all owners off the sidelines. So homes are being basically traded, but at a thoughtful, measured, normal pace. Right? This is the market that follows years of dramatic swings. It's a rebalancing market, if you will, right? Remember when I was talking about the projections for 2026 and that it was just going to be a normal market? That's what we're seeing. And so what does that mean? Where does that leave you, right? If you're buyers, I would say that this isn't a race anymore. It's a negotiation, right? With inventory steadily rising and prices being stable here in Charleston, you can be picky. You can be strategic without feeling like you're missing out. And for sellers, your competition isn't necessarily other homes, it's uncertainty. If you price right and market to today's thoughtful, educated buyer, you're going to get attention. But unrealistic pricing still slows down deals. And for investors, I think that the confidence gap creates opportunity. More inventory, stable prices means more leverage on offers and terms, right? Small investors really win when others hesitate, right? There's opportunity amongst the chaos. So if the market feels stuck, kind of now you know why, right? It's not broken, it's psychological, conflicting beliefs about, I think, affordability and timing and risk are what's slowing decision across the board. And even in a market with real data pointing toward stability. That's, I think, the power of consumer confidence. And it's one of the few things that can really turn the market on a dime. And when confidence ultimately catches up with reality, that's when the market's going to start moving again, right? So if you want to take a deeper dive into your situation, you're thinking of buying, you're thinking of selling, you're looking for some opportunity, first thing I'd say is keep listening, because when we come back, we're going to talk about why I think we're in this kind of, real estate cold war, so to speak, and why nobody wants to be the first to blink. And it's really kind of revolving around stubbornness, if I'm being honest. So we're going to talk more about that, but then we're going to talk about what to do about it, how you can find some opportunity amongst the chaos, or just the normalness of this market. So stick around for more of the Brian Beatty Real Estate Show right here on the Big Talker 1250 WTMA and WTMA.com. If you want to reach out to me with your real estate questions, or if you're thinking of buying, selling, or investing in real estate, or you'd like for us to manage one of your existing rental properties, we'd love the opportunity to earn your business. You can call or text me directly at 843-800-0065. That's 843-800-0065. Or check us out online at listingsincharleston.com. I'm, of course, your host, Brian Beatty. Thanks again for joining me. If this is your first time listening to the show, by the way, I have been selling real estate here in Charleston for 20 years. We've done about 1,500 transactions, about $1 billion worth of real estate sold. And I share my experiences as a top-performing real estate agent to help you guys better understand the market, the trajectory of the market, and then educate you on the process so that when it comes time for you to buy or sell a home, you are an educated, informed consumer. You know the right questions to ask, and you have an expectation about what a top-performing real estate agent should be doing for you. So if at any point in time you're listening to the show and you're thinking to yourself, I do want to have a relationship with a high-caliber real estate agent. We're thinking about buying or selling or investing, or we have a property and we're in the need of a property management company, we'd love to earn your business. Feel free to reach out to us, 843-800-0065. You can call or text that number. It comes straight to me, 843-800-0065. Or check us out online at listingsincharleston.com. That's listingsincharleston.com. And, of course, check out the Brian Beatty team on YouTube or on iTunes if you want to watch our videos or listen to our podcast. So I want to continue this discussion about where I think we are as a market. And I've put quite a lot of time into this show, a little bit more than I do normally, because I really want to help you guys understand and articulate why we are where we are in this market right now and how people are behaving, right? That's really the main takeaway is how are people behaving right now, and how can we use that to our advantage, right? So we're going to talk about something that's a little uncomfortable. It's not interest rates. It's not inventory. It's not inflation. We're going to talk about stubbornness, okay? Because right now in real estate in Charleston, we are what I think we're in what I call a housing cold war. Right? Buyers want 2020 pricing. Sellers want 2022 pricing. And 2026 reality is sitting somewhere in the middle, being basically completely ignored. And until somebody blinks, the market's going to feel stuck. So let's kind of break down what's actually happening. The median sales price, right, across Charleston, still hovering kind of in that low to mid 600s, depending upon the submarket, of course. But prices are mostly stable year over year. They're not crashing. They're not exploding. They're up 0.3% year over year, right? Inventory has improved, I would say, compared to, pandemic lows and days on market. Again, we're hovering around, 60, 70 days on market in many areas, which is a lot slower, of course, than the frenzy years, but historically still normal. I mean, we were essentially at right around 2 months until you went under contract before COVID hit and before the market went nuts, right? So mathematically, we're in a rebalancing market, but emotionally, we're in a bit of a standoff right now, right? No, neither side really wants to give. And so let's talk about, buyers first, right? A lot of Charleston buyers are anchored to 3% interest rates or $400,000 Mount Pleasant homes, or pandemic bidding wars being quote unquote over. But here's the reality. Those prices aren't really coming back, and those rates aren't coming back anytime soon. Yet buyers are still sitting on the sidelines thinking, if I just wait another 6 months, fill in the blank. And that belief really isn't based right now on Charleston data. It's based on headlines, and headlines sell fear. That's why when you go on YouTube, every real estate video is about the incoming crash. And do I necessarily believe that the market's about to completely crash 30%, 40%, 50% crash like some of these videos are suggesting? No, I don't. The hesitation that is being created as a result of this has a cost. And while buyers wait, rents keep climbing up, quality inventory is getting absorbed, life doesn't pause, right? There are plenty of opportunities right now to catch a seller that is frustrated with the experience of selling their home. There's a real reason why they want to sell, which is why they're still on the market in the first place. And people are passing them by. Make the offer. Put yourself out there. I mean, obviously, if it's a house you want to buy, right? But even investors should be out there just making offers. And that, they're not going to land in the vast majority of instances. I mean, talk to any really well-known investor, and you'll understand that you never get a yes until you ask first, right? And so they make a ton of offers on real estate, knowing full well that 99 out of 100 are not going to get accepted or even get the time of day from the seller. But every once in a while, you find somebody in a rough spot that's willing to play ball, and that's how they get good deals. And in real estate, the old adage is that you make money in real estate when you buy it, not when you sell it, because you can control how much you pay for a property. To an extent, you can control how much it's going to cost to repair. What you cannot control is what a consumer is willing to pay for that work once it's all said and done. You can have a general idea, you can speculate, but you can't control it necessarily, right? And so when people look at investing in real estate, they look at what they can buy it for and then what it's going to cost to improve. And then after it's all said and done, where's my profit margin and what does that need to be to have the resulting return on investment be worth the investment and the risk in the first place, right? There's an opportunity cost to everything. And so, you have these sellers out there that, especially move-up sellers in places like Mount Pleasant and Daniel Island and James Island and West Ashley that are emotionally attached to the peak 2022 pricing, right? They saw their neighbor get 12 offers, or they saw homes go for $75,000 over their asking price. And so now they list slightly high. And then when showings slow down, they blame the market, or they blame the agent, or they blame something. But the truth is, today's buyers are payment sensitive. They're cautious. They negotiate. The Charleston market did not crash. It's just normalized, and normalization feels like rejection to somebody who experiences frenzy, right? And they hear the stories from their friends saying that they put their home on the market and then within 24 hours they had 10 offers. But I think that if you dig deeper into those stories, you'll realize that person that, it happens now. I mean, I have a report that I'm willing to share with everybody. It's something that our brokerage exclusively hires a firm to produce for us that looks at stats that just aren't given by our Association of Realtors. And I am not necessarily a statistician. I do them, and I'm a big numbers guy. For those of you that listen to the show, you know that about me. But it's very clear and obvious, even in this market, that those that priced correctly, that did not have to reduce their price in order to sell their home, are getting their full asking price, and they're selling in about a week. And in fact, 1 in 3 of those properties are getting more than their asking price. But the other half of the homes that needed a price reduction that didn't sell are taking like 3 months to sell, and they're getting, 8, 9%, sometimes 11 to 13% off of their asking price in order to sell. It's the negotiation penalty that is applied to your home when your home doesn't sell quickly. It's a signal to the market that maybe it's not as hot as you think it is. And that's a harsh reality for some people to realize. And now you add in something like the mortgage lock-in effect, where thousands of Charleston homeowners are sitting on a 2.75, 3% mortgage. So even if they need more space or they want to downsize or they want to move closer to downtown or further away from the noise or whatever it is, they hesitate because giving up that payment feels incredibly painful. And I don't blame them, even if their equity has, exploded. So, what do? They renovate instead of relocating, or they tolerate instead of transition. They stay, even when they probably shouldn't. And that lifestyle gridlock is what's suppressing normal inventory turnover, right? Now, if we switch gears just for a second and talk about investors right now are underwriting deals assuming slower appreciation or almost no appreciation, higher insurance costs, and conservative rent growth. They want margin. They want leverage. But a lot of sellers still want peak pricing. So investors wait. And again, stalemate, right? So what this really is, it's a price discovery market, right? It's not a crash. It's not a boom. This is what economists call a price discovery phase. It's where buyers and sellers slowly negotiate reality, right? These are historically healthy markets, but they feel slow. They feel frustrating, and they feel uncertain because ego has to step aside for the math to take over. And that takes time sometimes. So the real question for you is, are you making your housing decision based on today's data or yesterday's emotions? Because markets don't really move when conditions are perfect. They move when confidence resets or shifts. And here's what I can tell you after 20 years and about 1,500 properties sold in this market is that the people who win in transitional markets are not the loudest. They're not the most emotional. They're not the most fearful. They're the most realistic. So if you're a buyer, waiting for 2019, or if you're a seller holding on to 2022, or an investor waiting for a crash that may not come, let's have a data-driven conversation, because Charleston isn't broken. It's negotiating, and someone always benefits when others hesitate. So this is Brian Beatty. You're listening to the Brian Beatty Real Estate Show. If you'd like to reach out to me, if you're thinking about buying or selling or investing, or really just trying to make sense out of what you're seeing, then give us a call, 843-800-0065. That's 843-800-0065. Or check us out online at listingsincharleston.com. That's listingsincharleston.com. I always like to take a little minute and just tell you that I appreciate you for listening to the show. I really do. And I appreciate all of you that reach out to me, whether it's a general knowledge question or the opportunity to earn your business. But either way, just love being on this platform and helping you guys really just better understand the real estate market, what in the world is going on. You can rely on this program to give you data-driven information to help shape your understanding of the market and then educate you on this process so that when it comes time for you to buy or sell a home, you really are an informed consumer and you win. That's the point, right? We want to do better than the other side. But I want to talk for just a little bit about kind of the elephant in the room, because every week, I hear at showings, at listing appointments, at the grocery store earlier this week, someone, leans in and says, Brian, I'm just going to wait for the market to crash. Not a slowdown, not a correction, a crash, right? And so I want to take a little bit of time, and frankly, I want to challenge that idea directly because waiting for a housing crash in 2026 is, to me, a little like, standing on the beach waiting for a hurricane that isn't on the radar yet. I mean, you might be waiting quite a while. So when people say crash, why do people even expect a crash? Right? Now, let's be fair. People aren't crazy for thinking this way, right? We all lived through 2008. I got licensed in 2006, fresh out of college. And, sold a few homes in 2006, sold more in 2007. In 2008, the market went haywire. I'm 23, 24 years old, trying to make sense out of all of this, but then realized the opportunity in that there are a lot of people going through very serious financial hardship right now, and I need to be an expert in this form of real estate transaction. So that's what I did. And then by 2009, I was in the top 1% of agents in Charleston. I've been there ever since. And then 2 years after that, I was the top agent in the Southeast U.S., right? So I understood and still very clearly understand the scar tissue associated with the market of 2008, right? That experience left a permanent imprint on how Americans think about housing. So when they see higher interest rates and homes sitting longer and price growth slowing down, it feels like the same movie just starting again. But the difference is this is not the same script, right? In 2008, we had a lot going on, obviously, but we had lending standards that collapsed. We had buyers with no equity. We had inventory that flooded the market. We had foreclosures that forced prices down. I mean, we had people that could literally go and get a mortgage and just basically pretend they had the money to afford a home, and they'd get the mortgage. And then the lender and the appraiser were in cahoots, to say like let's say a home was under contract for $530,000, and the lender says to the appraiser, "Hey, you're still good to golf at 530." Like there were these little languages that were being spoken, sometimes not even that discreetly, but we had major problems in 2008, whereas today we have almost the exact opposite conditions. Homeowners are sitting on record equity, right? Most have fixed rate mortgages. Very few are what I would call financially distressed. And we still don't have enough housing supply relative to long-term population demand. We're still nationally somewhere around 4, 5, maybe even 6 million housing units short of where we should be. And so you can't have a foreclosure-driven crash when people aren't being forced to sell, right? That's the missing ingredient that crash predictions rely on, is distress. And distress, quite frankly, is largely absent. Now, don't get me wrong. Cash flow is a different story. And affordability is a different story on a day-to-day basis with the cost of everything. I'll tell you this. I don't really go to the grocery store. My wife does. Mostly because when I go there, I just buy whatever I want. And my wife is like, okay, you're in timeout. No more going to the grocery store. I'll come back with lobster tails or something crazy. I think that might be the only place where I'm just like an irresponsible consumer is the grocery store. Like, oh, that looks good. Ooh, that looks good. It's because I never go, right? It's like an experience. It's fun. Well, anyways, I went there a few weeks ago and I'll be honest, I'm a little disconnected from reality at how much things cost at the grocery store. I was shocked and like really irritated, quite frankly. But again, my wife, wonderful wife, takes care of all of that so that I don't have to. But I would say that the financial stress bleeds into everyday life. But as it relates to real estate, a very large population of people have significant equity in their home. And if cash flow became a problem, they could borrow against it. They could sell their property. They are not forced into a situation where they don't have the ability to sell it because they owe more than what it's worth. Now, if you bought something recently and you were anticipating prices going up, that's a little bit of a different story, because anytime you sell a house and you work with a real estate agent, between commission and closing costs and attorney's fees and tax prorations and whatever else might be negotiated, you're looking at somewhere between 7, 8, 9, sometimes 10% of the overall sales price in fees and expenses that get divvied up all over the place, and negotiability that gets divvied up. And so there's a cost to sell. If you buy something and then immediately turn around and sell it for what you bought it for, you're going to lose somewhere between 7 and 10% of that value. That's just the cost of doing business when you work with a real estate agent, and then when you've got all these other parties involved and expenses associated as a seller. But I would say that in general, distress is largely absent. So what we're seeing instead is something far less dramatic. It's a normalization cycle, right? Prices flatten, inventory builds gradually. Buyers regain some negotiating power, which we are definitely seeing, and sales slow, but they don't collapse. That's not a crash. That's a market catching its breath after running a marathon for the last several years, right? Here in Charleston, I mean, we are seeing stable pricing in most submarkets. We are seeing, longer marketing times, but still steady absorption, right? Very low foreclosure activity, sellers with flexibility, not desperation. And so this is a patience-driven market. It's not a panic-driven one. And crashes require panic, in my opinion. So here's something I would say that's a little fascinating. The more people say they're waiting for a crash, the less likely a crash becomes. Why? Because those buyers are still employed. They have savings. They're watching the market and they're ready to jump back in, right? That creates what economists call a shadow demand, right? A huge pool of buyers that are waiting to re-enter the market the moment prices soften. And that demand acts a little bit like a shock absorber, right? Prices don't fall dramatically because buyers step back in. That's exactly what we've seen over the past 2 years. Every dip gets met with demand. And so here's the part nobody's talking about. People try to time housing like they time stocks, right? But housing isn't just financial. It's lifestyle driven. You know, families grow, jobs change, kids change schools, retirement happens, health changes. The biggest mistakes I've seen in 20 years weren't from buying at the wrong time. They were from waiting too long to make a life decision because someone was trying to outguess or outsmart the market. You can refinance a rate. You cannot refinance time. So instead of asking, when will this crash happen? I would say a better question is, does today's market support what I need my life to do next? Because Charleston real estate isn't collapsing, it's recalibrating, right? And historically, recalibrating markets reward decisive people, not spectators. So if you're waiting for a crash, just make sure you're not putting your plans on hold for something that might not ever arrive, right? The market doesn't need to crash for opportunities to exist, I think is the point. It just needs some clarity. And that's exactly what I'm here to help our clients find. So if you want to talk through what that looks like, whether it's now or someday, we'd love the opportunity to help you better understand some timing opportunities in this market, which is what we're going to talk about next, by the way. So stick around for the last segment of the Brian Beatty Real Estate Show right here on the Big Talker, 1250 WTMA. But if you want to reach out to me and have a conversation about this, my number is 843-800-0065. That's 843-800-0065. Our website is listingsincharleston.com. That's listingsincharleston.com. And remember to check us out on YouTube and our social media accounts and iTunes, Spotify for the podcast version as well. All right, let's wrap this up, right? Let's talk about the opportunity window that nobody's really talking about right now. So let me ask you a question, especially those that are here in Charleston. I know that based on YouTube, we get folks from all over the place, and you can answer from your areas too. But when was the last time you had more inventory to choose from, fewer bidding wars, negotiating leverage as a buyer, and sellers that were actually willing to talk terms and prices that are stable, not skyrocketing? Not 2019, not 2021, not 2022. It's right now. It's right. It is this market right now, and almost nobody is talking about it because when the headlines aren't dramatic, people stop paying attention. And that is the unfortunate reality of somebody that creates content for people to absorb, is that I make the decision to not be a drama queen. I don't need to propose this ridiculous idea that prices are about to come down 50% so that I can maintain viewership and sponsorship on YouTube. That's not the point of this program. The point is to help you understand what in the world is going on and make sense out of it from the perspective of somebody that helps people buy and sell real estate every day, that invests in real estate, that funds real estate investments, that manages rental properties. I'm in tune with the market. And again, when headlines aren't dramatic and have that buzzworthy effect, they sometimes get overlooked. But this quiet phase that we're in is, I think, where some smart moves get made, right? Because boom markets feel exciting, whereas crash markets feel terrifying. And traditional markets just feel boring. And I told you guys, when I was doing my projections for 2026, I used the word boring. It's going to be a normal, non-drama filled real estate market. But here's what history shows. The best long-term real estate decisions are often made in boring markets. Why? Because emotion is lower. Now, you can also argue that when you're in a very highly emotional market, sometimes there are some excellent opportunities for gain for those that are going through a distressed situation. And of course, that's always going to exist. But right now in Charleston, buyers aren't competing with 15 other buyers. Sellers aren't dictating outrageous terms like you have to buy it sight unseen. And no, you're not allowed to do a home inspection or an appraisal. You just have to buy it and trust that you're going to actually like the house when you actually get here. I mean, if that sounds ridiculous, just take a trip down memory lane to a few years ago when that became the norm. And we essentially had to alter our business practices to have a virtual home buying and home selling program. I mean, that's how we had to adapt to the times. You also have investors that can, negotiate price and repairs and rate buy downs and concessions, and builders that are offering incentives again. That's not weakness. That's just leverage returning to balance, right? The scales are balancing, and balance, I think, is where strategy thrives. So I think here's the psychological trap that most people fall into. They're waiting for rates to drop dramatically, because let's think about what happens if rates fall sharply. Demand explodes, right? Competition returns, leverage disappears, prices accelerate again. And so, ironically, the very thing that people are waiting for is the thing that would eliminate today's advantage. Right now, rates are high enough to suppress the chaos, but they're stable enough to be able to plan around. I mean, that creates a window. And let's be real, 6% is not a bad interest rate. But when you attach it to today's prices and compare that to wages and then the cost of everything else, it's what's there. There is a reason why we're stalled. But again, it goes back to confidence, and where there's chaos, there's opportunity. So if you talk local reality across Charleston County and surrounding areas, again, inventory has improved meaningfully, I would say, compared to pandemic lows. You've got days on market that are longer, which gives buyers some breathing room so that they don't have to make immediate decisions on things. Because we've also seen quite a bit of properties go back on the market. They were under contract. The buyer essentially got cold feet. They said, hey, you know what? I'm thinking that this isn't the right house for me. Let's get out of the deal. I'll pay my termination fee to the seller, and we'll see if something else hits the market that's better, right? And you've got sellers that are, I think, more realistic than they've been in years, as another by the way. And you've got new construction communities that are negotiating again, which is nice to see. So you've got, move-up buyers in Mount Pleasant. They're not facing 20 other competitive offers anymore. Downsizers on James Island, they can sell and negotiate on their next purchase without fear of not being taken seriously because they have a home sale contingency. Investors in North Charleston or West Ashley can actually run conservative numbers that still make deals work. It's not a desperate market. It's a disciplined one. And I think disciplined markets reward disciplined buyers. And I think here's something that almost nobody discusses. Homeowners today are sitting on historic equity levels. Many Charleston owners have gained, 40, 50, 70% equity over the last decade. And that equity is optionality. It allows you to reposition or downsize or diversify into a rental property or pay off debt or improve your lifestyle. But fear of giving up a low mortgage rate is freezing people. It's that lock-in effect that we're talking about. And the irony is that your rate might be 3%, but your life might not fit your house anymore. And sometimes the opportunity just isn't financial. It's functional. And every transitional market really creates kind of two groups, right? The majority, which are those who wait, and then the minority who move strategically. And the minority locks in, I think, favorable negotiations. The minority buys before competition returns. The minority sells before supply expands further. And then 5 years later, they look like they're the smartest person in the room. Not because they predicted the future, but because they acted when others hesitated and they saw the window of opportunity. And it wasn't dramatic and it wasn't flashy, but it was powerful. So, instead of asking, is this the perfect time? I would say, is this a strategic time? Because perfect timing is, I'm here to tell you that it doesn't really exist, or it's extremely hard to find. But opportunities windows, they do exist. And I think we're in one right now. It's defined by stability and negotiation and reduced competition and motivated but not desperate sellers. And that combination, quite frankly, just doesn't last forever. So in my opinion, Charleston real estate is not crashing. It isn't exploding. It's resetting. And resets are when positioning happens, right? So if you're thinking about buying or selling or investing, this might be that quiet window of opportunity that no one's really talking about, but everyone will look back on, right? So if you'd like more information on that, if you'd like to better understand what your home would sell for in today's market, or maybe you want something called a value gap analysis where you understand what it's worth right now, and then if you did some work to the property, here's how much more it would be worth to justify those repairs, which, by the way, we can help you finance. We have other ways of helping folks too, but I would encourage you just to reach out to us if you have questions about the market or if you're thinking about transacting in real estate. We'd love the opportunity to help you and ultimately earn your business. My number is 843-800-0065. That's 843-800-0065. You can check us out online at listingsincharleston.com. That's listingsincharleston.com. And of course, check us out on iTunes and Spotify with our podcast, or on YouTube or our socials if you want to watch some videos. So thanks so much for listening, and you guys have a great weekend. Take care.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.